Well, good morning, YouTubers. It is I, the one, the only, I do mean only, Big D, coming to you live and in person from Dallas, Texas. Ugh. Yeah, I've got about 26 minutes before they will open the door and take the crap off. Yeah, this is unreal. What do? You sit and wait. Before I get into today's topic, have you subscribed? Come on now. Help brother out. Help brother out now. Subscribe to the channel. It's a little chilly out here. Warm brother up. Hit the bell icon. Don't want to miss any of this stuff because, well, to be honest, people love the bullshit out here, and I'm not going to do it. The No BS channel. Hit the bell icon. Hit the like button. Give it a thumbs up. If you don't like it, give it a thumbs down. Show us you're a big loser. Leave comments. I'll generally answer them. If I'm driving, I won't. But when I stop, you'll notice a bunch of them get answered at once. That's because I stopped. Today's topic, and I'm going to do this in two parts because it's going to be easier and less confusing. I keep getting asked about taxes. Now, I'm an owner-operator. I own the van. Okay? If you own the van, you're an owner-operator. If you drive someone else's van, you're what's considered driving for an owner or the person who owns the van. Okay? And you do a split. Now, I keep getting asked, what's a good split? The industry average is 60-40. With the price of gas out here, 50-50, you're getting screwed. 55, 45, you're getting screwed. 60-40. Minimal. And you're going to have tough time making money at it, just so you know. But I've been asked about taxes, how that works. Well, if you're the owner, it works great. Here's why. The biggest write-off you get out here, mileage. I can't remember what it was this year, 57, 58 cents a mile, 56, somewhere in there. I have to look. I have to still do my taxes. I got an extension done on them because of a screw-up at a federal agency, and they sent me a 1099-G, which I didn't have a 1099-G. A little fraudulent activity at the unemployment office, and they issued me a 1099-G and paid someone else the money, so that's being corrected, and I'm going to get an updated one so I can file my taxes. If I don't, I'm going to have to pay taxes on, like $15,000, and I'm not going to do that. I'm not paying someone else's taxes. Send the money where I don't even live, and you expect, no. I already proved it wasn't me, so they just have to correct it. But the biggest write-off is the mileage. So, if you own the van at a 60-40 split, what they're not telling you is you're going to pay the gas at 60-40. You're going to pay the tolls. You're going to drive the van. The owner's going to get the 40 and pay for all the maintenance, the repairs, insurance, all that stuff. But he also gets to write off all the mileage. So, let me get my calculator here out here. My calculator. My calculator. And let's say the van drove 100,000 miles for the year. And you averaged, let's go $1 a mile, $100,000. You got 60% of it. You got $60,000. The owner got 40%, or 40,000. But he gets to pay taxes off of, that's right, 100,000 miles at around 56, 58 cents. And they're out to figure out what the rate is this year. So he pays no taxes. None. Zero. Nada. So let's say 100,000 miles times, oops, don't want to go times, divided by, let's say 15 miles per gallon. Oops, gives me an ear. Oops. 100 divided by 15 miles per gallon. Just giving you a rough number. You used 6,666 gallons of gas. 6,666 gallons of gas at $4 a gallon. This is why I keep telling you guys, running for an owner doesn't pay well. You're going to see it real quick. Times roughly $4 a gallon. is $26,600. Let's just say $27,000. You made $60,000. We have to take $27,000 off. You got to keep those receipts, your gas receipts, because you can deduct the gas and the tolls. $26,664. You're gonna have a couple $100 tolls. $27,000 with tolls. You get to write off, and there you have it. You have roughly $60,000 or $30,000 of taxable income. But you have one other deduction too. We actually have a couple. Your cell phone. Don't forget your cell phone monthly. That's a deduction. There's a per diem out here. I have to look that up too. It's roughly like $50 a day. For every day you're on the road, you get a $50 per diem. So if you're out here, say, 10 months, 300 days, times 50, it's 15,000. Now you're down to 15,000 taxable. You want to take every deduction. Anything you buy for the road, pencils, pens. You got to keep all these receipts, folks. Pencils, pens, cell phone, vest, gloves, anything, headsets. You buy while you're on the road, you get to write it off. The per diem. Most drivers forget that per diem. You get a per diem. Even in a van, you're considered an over-the-road trucker. If you stay in a motel, you get to write that off. All this is write-offs. You buy a sleeping bag, it's a write-off. Blankets, pillows, all write-off. Keep those records, because you don't want to get slapped with a big tax bill. The owner isn't. He wrote everything off. You, on the other hand, don't get that luxury. So you're going to have to itemize, keep every little thing you can come up with. Even if it's trivial, it adds up. Don't forget the trivial. I mean, you don't have any maintenance. That's all on him. So you're going to have tolls. Your gas is going to be your big one. Your per diem. Those are the ones you've got to keep on, and what you buy. Now, the food is per diemed. That's what that's covering. 3 meals a day, $50. If you're smart, you take your per diem and you get yourself the refrigerator and microwave, and you eat cheap, and you get to save that money, but you get to write it off the other side. So it maximizes your profits. Okay? That's what you're looking to do. Now, somebody said if you're basically working and you can write everything off, you're a tax cheat. No, you're not. You have to learn to be smart. Just because you can write 90, 95% off doesn't mean you're a tax cheat. It just means you played by their rules. They put them out there, you take advantage of them. Now, the next one will be on the owners. They're not owners, but an owner-operator. How he's taxed and how he pays his taxes. But just now, I'm doing it for those of you who are driving for someone else, what you can write off. Now, you can do a home office deduction, and that's very complex. Well, it's not, but you got to divide the square footage, this and that, break it all down, and you have to use it exclusively for your work to make it work. So there are rules you have to play by. My advice is get yourself a good tax accountant in trucking in your area that understands all the rules and regulations to help you take those deductions. This is Big D saying, let's pay as least to the government as possible, because we know they can't spend money wisely. Look where we're at today. Later.